Let's now bring on board Mr. S.S. Mundra, CMD at BoB, to chat about how their bank in the sector has been. Mr. Mundra, you've launched a new scheme on home loans where you're offering all customers loans at base rates, and you have done it, across the board. What kind of growth are you expecting in this segment?
Interesting question. Let me, explain to you the rationale that why it is done. This is something we were contemplating, thinking over for quite some time. Now, home loan is an important market today. If I look in the other economic activity, this is one activity which is consistent and which we find it is relatively sound. That is one thing. In that context, share of home loan in our portfolio is not what I would like it to be. There is a room to growth. That was the primary thought behind it, that there is a scope to enhance it. Point two is why across the board. So I would say that home loan is more like a consumer product. So if you are selling a cake of soap, you don't differentiate the pricing if you are selling it in a metro, or if you are selling in an urban area, or if you are selling one, or if you are selling six. So these are more those kind of things. Whereas when you are doing a project loan, it is more a customized product where you have to customize the each pricing also. So that is the thought or philosophy behind a uniform price. Coming to three, for existing as well as old, yes, I don't want to a situation where I am chasing the new customers, and my existing customers are going away or being taken over by someone. So that is there. And fourth, I must say it here, that is a big assurance to the new customers who would be coming, the new home loan taker who would be coming, that in future, if there is a rate movement, they would not be left out here. They will always be getting the benefit of it. This is what the whole philosophy behind is. Your point is right. If I have done this, certainly there is a sacrifice on the, the P&L, which I would have earned on the existing account. But we are confident that we would be able to attract more volumes from this. And since we have a liquidity, if that liquidity gets deployed in more volume, probably from the perspective of margin, it would be neutral. That is what we think.
Right, Mr. Mundra, the Reserve Bank of India has recently issued tighter norms on CDR. It not just requires you to make more provisions on restructured assets, but also classify them as NPAs from 2015. How will these norms impact your profits immediately and over a period of 5 to 7 years?
No, see, it's like this. Immediately, of course, as you enhance the margin requirement, some incremental impact would come. But these are the, incremental steps. So it's not going to be a very significant impact immediately on P&L. Going forward, yes, when you have a, say, larger margin requirement or classification of NPA. But let us try to understand. Number one, to talk about 5 years is something. To do it now would be like a wild guess, because it will be dependent on two factors. What is the kind of growth in coming into economy, and what kind of asset quality is probably finally emerging. My belief is, going forward, if the growth rate improves and the asset quality concerns are behind us, then it should not be a major impact on the bank.
Right. So what is the restructuring pipeline looking like for the first quarter, and which sectors are the main contributors? Any large accounts which are going into CDR?
I did tell while announcing the annual results also that this quarter we are expecting a pipeline of something like 2,500 crore, and it is across various sectors. There is no lumpiness or no particular sector which is showing this kind of restructuring.
Right. So how is your asset quality shaping up, and could we see an improvement in Q1, or you see pressure will continue for some more quarters as well?
I think right from Q3 when we announced the result, I had indicated that there may be a stress for next 2-3 quarters, but you would appreciate that in Q4, as far as the domestic book is concerned, there is clearly a sign of improvement. In absolute terms also, gross NPA has come down from the preceding quarter on a trailing basis. The incremental NPA which was reflected in Q4 was largely on account of some international exposures, and which was as a one-off exercise. So my feeling is that maybe a quarter or two would be more consistent with the previous quarters, and then it should reflect a continuously improving trend.
Right. So how about credit growth? I mean, are you seeing corporate demand picking up, or are you focusing on other sectors for lending?
I think in Q1 to ask this question that have you seen any pickup in corporate demand would be defying the history. Q1, Q2 never sees any robust credit demand. Normally, traditionally, it is in the busy season, which will come from Q3 that you can see. But if you know, the general projection is 14-15%, and we have been able to grow 2-3% above the industry in past, so that is what I would put my credit growth projection at this point of time.
Right. What are your fundraising plans going forward for this financial year? Any plans to tap the markets?
Fundraising, yes, we are contemplating. Of course, we have a large presence and we have a customer funding sources which are available. But nonetheless, we are planning and we are working on it. We may go for something like a 500 million MTN program, depending on when the market point we think that is the right point to enter into the market.